Welcome back to the channel. We start today with massive news shaking up the semiconductor world. Goldman Sachs just completely reset their price target for advanced micro devices, or AMD, raising the 12-month price target to $450 from $240. They are making a bold case, arguing that the coming agentic AI wave means AMD is positioned to be one of the biggest winners. We dive into how Goldman sees AMD's server CPU business as a direct beneficiary of the shift toward complex, task-completing AI, and we explore the massive growth projections they are seeing for AMD's data center GPU business, including a huge deployment deal with Meta that could be a major revenue driver moving forward.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, the momentum around AMD is absolutely electric. Shares of advanced micro devices climbed pre-market Monday, pushing the chipmaker into the center of the AI hardware spotlight. This isn't just about the AI chips anymore. Investors are looking at the entire semiconductor sector, with AMD jumping over 11% and Micron surging nearly 15.5%. We break down what this shift means, looking at how data center sales surged, driven by demand for ePYC server chips and Instinct GPUs powering everything from inferencing to agentic AI. And we hear from CEO Lisa Su on why the data center is now the primary driver behind AMD's incredible earnings gains. But the landscape is shifting fast, and big players are making big moves. Cathie Wood's ARK Investment Management has just signaled a significant rotation within their flagship innovation funds. While they are adding exposure to clinical AI with Tempus AI and genomics with GeneDx, they are trimming advanced micro devices and Rocket Lab. We examine why ARK is trimming AMD after its strong run, and what their buys signal about where they see the next wave of AI infrastructure and clinical technology heading, contrasting the consensus semiconductor view with ARK's emerging picks. Finally, we look at the broader market implications and the future outlook for AMD. Following AMD's recent earnings report, analysts are upgrading the stock, with Goldman Sachs and Bernstein both issuing buy ratings based on improving CPU demand fueled by AI workloads. We discuss the massive potential of the server CPU market, with Bank of America projecting it could explode from $27 billion to $60 billion by 2030, while also noting the looming risk of a correction warned by BTIG. We conclude by looking at the recent 52-week high for AMD, and what this whole semiconductor rally suggests about the changing of the guard in the AI landscape. Stay with us for the full breakdown. Goldman Sachs has issued a significant upgrade to advanced micro devices, or AMD, stock, raising its 12-month price target to $450 from $240 and upgrading the rating to buy. The firm's bullish stance is anchored in the anticipated shift in artificial intelligence, specifically the rise of agentic AI, which is expected to drive substantial demand for AMD's products. Goldman Sachs argues that the transition of AI from simple response generation to complex task completion, including browsing, coding, and workflow management, demands significantly more CPU power. They view AMD's server CPU business as a direct beneficiary of this trend, as enterprises heavily rely on x86 infrastructure, for which AMD's chips are perfectly designed. Furthermore, Goldman is highly optimistic about AMD's growing data center GPU segment. The firm projects that AMD's GPU units could expand by 66% in 2026 and nearly double in 2027. A key catalyst cited is a substantial 6-gigawatt deployment deal with Meta, which Goldman identifies as a major future revenue driver. The upgrade reflects Goldman's belief that AMD stock is currently undervalued relative to its future earnings trajectory. Their estimates for earnings per share, EPS, in 2027 and 2028 are approximately 20% higher than Wall Street consensus, suggesting that positive estimate revisions could be the primary driver of stock performance over the next 6 to 8 quarters. Goldman calculated their price target using a 30x price-to-earnings (PE) multiple applied to a normalized EPS estimate of $15, projecting a potential stock price of $594 in a bull scenario and $176 in a bear case. While Goldman maintains that NVIDIA and Broadcom remain their top semiconductor picks, they position AMD as a compelling entry point for investors seeking exposure to the agentic AI wave before it is fully priced in. Investors monitoring AMD should watch for potential risks, including slower-than-expected AI adoption rates, any complications in the Meta GPU deployment, and the potential for ARM-based chips to capture an unexpectedly large share of the enterprise market. The analysis underscores a strong conviction that AMD is poised for significant growth, driven by the evolving demands of AI infrastructure. Advanced Micro Devices shares continued their rally on Monday, solidifying their position in the AI hardware sector. As of early Monday morning, AMD was trading at $459.80, marking a 1.01% gain pre-market, following a significant 11.44% surge for the stock on Friday, closing at $455.19. This upward momentum reflects a broader shift in investor focus, moving beyond just dominant AI chip manufacturers to the broader semiconductor industry, which propelled the S&P 500 and Nasdaq to new highs. Other semiconductor stocks, including Micron and Intel, also saw substantial gains, driven by renewed enthusiasm for data center demand. The market's focus on AMD has pivoted. The key question is no longer just about the volume of AI chips, but whether sustained data center processor demand can justify the recent stock appreciation. AMD recently reported first-quarter revenue growth of 38%, reaching $10.3 billion, with data center sales surging by 57% to $5.8 billion, fueled by strong demand for ePYC server chips and Instinct GPUs used in AI. Management commentary underscores this focus, with CEO Lisa Su identifying data center as the primary driver for revenue and earnings, citing robust demand in inferencing and agentic AI applications. CFO Jean Hu highlighted record quarterly free cash flow, demonstrating the company's ability to manage growth investments while improving margins. Wall Street has responded positively to this narrative. Goldman Sachs issued a buy rating and doubled its price target to $450, while Bernstein upgraded AMD to outperform with a target of $525, deeming AMD's server CPU ambitions potentially plausible. Barclays labeled AMD one of the most interesting plays in AI right now, and Jefferies highlighted the importance of server CPUs, projecting AMD could capture nearly half of the projected $120 billion server CPU market by 2030. The strategic importance of CPUs is central to the current narrative. While NVIDIA maintains dominance in AI accelerators, GPUs, AMD is positioning itself for growth in the CPU space. As AI moves toward real-world deployment, cloud providers require increased CPU capacity alongside accelerators. Projections suggest the server CPU market is set to grow over 35% annually, reaching $120 billion by 2030. Competition remains fierce. NVIDIA continues to lead in AI accelerators, while Intel is leveraging its CPU strength and new manufacturing contracts. Some analysts, like Lynx Equity, have favored Intel based on partnerships, such as a reported Apple chip deal. However, risks persist. Analysts caution that much of the recent rally may already be priced in, noting that AMD's stock recently traded at a valuation multiple approaching double NVIDIA's. Despite these headwinds, the overall narrative has evolved. The focus is now on comprehensive compute solutions, encompassing CPUs, GPUs, cloud clients, and major AI rollouts. Monday's trading will serve as the next test for this thesis, as market expectations suggest little room for significant disappointment. ARK Investment Management has executed a significant rotation within its flagship innovation funds this week, adding positions in clinical AI and AI infrastructure while trimming established names. The moves, detailed in the weekly trade recap, indicate a strategic shift toward deeper, foundational elements of the artificial intelligence build-out. ARK's additions focus heavily on specialized sectors. The firm acquired Tempus AI, a platform for clinical AI and genomics data, alongside GeneDx, which trades under the WGS ticker and targets the whole genome sequencing theme. These buys underscore a growing interest in healthcare adjacency and genomics as the next frontier for ARK. Reinforcing the infrastructure angle, ARK also increased its stake in CoreWeave, bolstering exposure to AI cloud GPU infrastructure. The firm views these additions as undervalued exposure to the next phase of AI development, prioritizing infrastructure depth over headline consumer AI names. Conversely, the firm trimmed positions in key semiconductor and aerospace names. Advanced Micro Devices, a heavily watched AI chip stock, was sold following a strong run tied to data center GPU demand. Similarly, Rocket Lab was trimmed after its aerospace-driven rally pushed its position into a sell zone. The pattern observed suggests profit-taking on names that have already delivered substantial returns, aligning with a historical trend where ARK rotates out of consensus winners into earlier-stage, A-adjacent stories when valuations become stretched. In summary, the weekly recap presents a clear contrast. While consensus favors AI semiconductors, ARK is signaling its thesis points toward clinical AI and specialized infrastructure providers. Investors are advised to view these moves as one data point, emphasizing that position sizing and fundamental analysis remain paramount. Advanced Micro Devices shares have surged to a new 52-week high following strong quarterly earnings, revenue, and guidance that exceeded analyst expectations, largely fueled by robust data center demand driven by artificial intelligence. The rally reflects a growing market consensus that AI data centers will necessitate a broader array of advanced hardware components beyond traditional graphics processors. CEO Lisa Su highlighted that AI agents are generating tremendous demand across the AI adoption cycle. AMD has significantly revised its long-term outlook for the server CPU market, now forecasting 35% growth over the next 3 to 5 years, up from a previous 18% estimate, driven by accelerating AI and data center spending. Su confirmed that the data center business is now the primary engine for the company's revenue and earnings growth, noting that inferencing and agentic AI are boosting demand for high-performance CPUs and accelerators. Industry analysts are responding positively. Goldman Sachs and Bernstein upgraded AMD to buy ratings, pointing to improving CPU demand from AI workloads. J.P. Morgan analysts identified a structural inflection in both server CPU and data center accelerator growth trajectories. Wedbush raised its price forecast to $450, citing benefits from stronger unit sales and pricing tied to compute racks supporting agentic AI workloads, suggesting rising CPU demand could counterbalance any slower GPU ramp. Meanwhile, the broader semiconductor sector faces caution. BTIG analyst Jonathan Crinksey warned that the current chip rally resembles the late 1990s dot-com boom and cautioned that the sector could face a 25% to 30% correction. However, Bank of America projects significant expansion for the data center CPU market, estimating it could grow from $27 billion in 2025 to $60 billion by 2030 as AI agents increase computing requirements. Investors are also diversifying, with Mizuho analyst Jordan Klein suggesting the semiconductor rally signals a changing of the guard in AI, noting investor rotation into companies like AMD, Intel, Micron, and Corning.